Rule number 5, fundamentals always come first. It doesn't matter if you're looking at the stock market, the currency market, the futures market, the bond market, any market. The fundamentals always come first. Warren Buffett's famous for saying, in the short run, the stock market is a voting machine. In the long run, it's a weighing machine. What does that mean? It means that over the long run, we're all going to find out which companies are making money and which companies aren't. We're all going to find out which central banks are doing the best job of managing the interest rate and inflation scenario and which ones aren't. Over time, the truth will come out and the truth will set you free. You could say that the truth is expressed with technicals, but if you can dive into a financial statement or an earnings report or an earnings transcript, or you can dive into the underlying fundamentals of an economy, or if you can find a way to really learn about the real picture behind the demand for natural gas, for example, those fundamentals over the long run are going to drive the direction of price. This is so important because most people in today's trading world put technicals first because they're visual. You can line them up on a chart. It's easy to see, and they're fun technical candle patterns and whatnot. And there's a place for those things. But the real market movement happens because the fundamentals eventually play out. The final move, the big moves, the longer term moves, the ones that pay off consistently, they're all based on fundamentals. A company's got to produce cash flow. A company's earnings have to be increasing over time. A company can't have too much debt. A country can't be running a giant inflation rate. And the list goes on and on. If you learn to study the fundamentals first of the financial instruments you're the most interested in, you're going to set yourself up for long-term massive success.